Good morning. It's Wednesday, September 16th. It's Fed Day. It's finally here. So I'm Phil Streible, Chief Market Strategist at Blue Line Futures, and we've seen some widely expected liquidation ahead of today's historic event. I mean, many of these asset classes, many of these commodities, stock indices have had record runs and highs here coming into this type of event meeting, and we've experienced so many different events leading up to this date. And a lot of traders have liquidated positions, gone to the sidelines ahead of things like unemployment data, ahead of Chairman Powell's Jackson Hole Symposium, ahead of CPI. Well, why would they not also liquidate some ahead of some key events, at least the Super Bowl of events, this Fed decision? So some bullets that I have on the whiteboard here that is interesting to note is that for the first time in 30 years, foreign central banks now hold more gold than U.S. Treasury securities, and it really reflects the decline in the trust for the U.S. government. You also have the dollar index trading near three-year lows, and then it's been over 100 days since we've seen a 2% correction in the S&P 500. So all these things kind of brewing in the background and taking place in the backs of minds of different investors and traders out there. Now, many different traders have different time frames, but now with the 0 DTE options and option expiration coming up, a lot of traders will hedge and will put on significant amount of put options ahead of these types of key risk events. One thing that we did in our Metals Alpha portfolio, which has had a phenomenal year to date, we trim back some of those positions. We put some of those hedges on coming in. So this type of movement in the metals markets will have very little impact on things like our CTA and what we run. And that's really responsible trade management. You want to be in these markets for these trending periods of time, try and capture a large slice of the trending type environment. And then when you start to get the noise and things like that, that's when you get a little bit more defensive during the noise. And then once the noise goes away, you get back in the market here and you reposition and readjust and deploy capital. So looking at today's Fed meeting, you really want to watch to see if those dip buyers emerge, especially in the U.S. equity markets. So the actions of the Federal Reserve and our impact on economic cycles tends to be significant. When the Fed does reduce rates, it tends to lengthen out the current cycle that we're in. This leads to improved financial conditions, and the economy is expected to gain some momentum approaching its full potential in about early 2026. This is where when you get your wealth advisors looking out, and this is where the Russell 2000 really led the charge here, is that they're looking 6 months, 9 months, 12 months out on where we're at, where interest rates are at, where the economy will be, and things like that. They're all adjusting their terminal rates. That's where the Federal Reserve stops lowering interest rates, and then they can come out and they can calculate profitability, corporate profits, and things like that. The gold market looks at as that particular terminal rate is kind of its anchor, is where it's trying to gravitate to at all times. So if the terminal rate shifts dramatically in one direction or the other, that's where you get an acceleration coming into these markets here. Now, will the continued Fed central bank gold holdings continue to expand? Well, that's another thing, because once the coffer is full too much, they might have to look at other outside markets here. So another key to this is that the Fed's upcoming summary of economic projections, you're going to hear a lot of that. It's the SEP. It's expected to indicate that 2 interest rate cuts will occur in 2025. That's going to be your September and your December meeting. That's why a lot of these different financial institutions have 2 interest rate cuts expected here. But the reality is that if you go into the current things that have happened recently with the labor market. Now, there is some concern that the labor markets are a little bit frothy, given that you had flooding in Texas and some other outside developments there. The possibility of heightened inflation because of the tariffs, that is something that they are seeing, and that could be some of the strength that we saw in the retail sales report. So you're going to want to see if Jerome Powell leaves that October meeting as a live meeting. If he does keep a dovish approach and keeps the possibility of the October adjustment open, we could see an acceleration in U.S. equities higher here, and you could see another bit of a lag on the dollar index a bit lower. So there's some uncertainty regarding his ability to align that with market forecasts, and the current light positioning ahead of this event resembles the situation we saw in 2019 when Powell, his insurance cuts, and that's where the October cut would come in, would really surprise this market due to lack of market exposure and could lift things back up. So there's a few different scenarios that are ready to play out here. If you look at the option markets are really looking at something closer to a 0.7% move higher in the S&P 500. So the 25 basis point cut is expected. It's going to be interesting to see the level of dissent that comes in from both sides here. Remember, you have hawkish people, you have dovish people, you have neutral people because the FOMC is a committee. So the Fed watchers are expecting differing views on employment and inflation, and that will prevent officials from promising any kind of aggressive interest rate cuts. So there's a lot coming in. Again, the bond traders are stepping up option wagers on at least one 50 basis point cut this year with the 3 remaining policy meetings. So the option markets are looking at, again, 0.7% higher on the S&P 500. You look at JP Morgan, the option markets are showing just under a 1% move higher, and that the range of possibilities are from a decline of 0.5% on up to about 1% on the S&P. So realistically, nobody knows what the market's going to do. The market's going to price itself however it sees fit once we get this type of news flows coming out. So you take a look at the global markets. Well, European stocks, they steadied after yesterday's decline here, and investors are cautiously awaiting this Fed decision. Tech and retail shares outperform while energy lagged. You go into the Asian trading, well, Asian equities, they swung in a narrow range after hitting that all-time high. Again, those were people that are repositioning here. You saw gains in Hong Kong, mainland China, those offset those tech-heavy losses in South Korea, in Taiwan, and the MSCI was a little bit unchanged. So that CME's Fed Watch tool, the latest, 96% chance of a 25 basis point cut, 4% chance of a 50. Poly market showing 91 and 7. We do have housing starts and building permits. Those are scheduled at 7:30. But that FOMC meeting at 1 p.m. Central Time, that's what everyone's going to watch here. So I expect to see a little bit of liquidation going into it, maybe a little bit of repositioning around that 10:30 Central close, and then it's going to be kind of a wait and see here. So, you have this liquidation ahead of the event risk. So if you look at the silver market, really kind of the next level would be like 41.35, and then you go below that, it's going to be closer to like that 40.85, 40.80, and then $40 below that. So those are 3 levels of support. You go into the crypto markets trading around that pivot 116. You go to Ether, it's the 42.65 remains key support. So the ETF flows, they came in and they bought silver, they bought gold, they bought palladium, they sold platinum here yesterday. Gold up 14%. They added 203,000 troy ounces of gold to their holdings in a previous session. And then the ETFs, they added 4 million ounces of silver holdings in the previous session. 3rd straight day of growth. I had someone ask me yesterday about how they could just secure these ETFs and secure this silver so quickly. Like, where did these ounces come from and things like that. And it's really, where do they acquire the physical silver to back their shares? So these are authorized participants. Those are the keys here. And I deal with a lot of these different players here. It's large financial institutions. They're known as authorized participants. And basically, they have a critical role in the creation and the redemption process of the ETFs. So when they see strong demand for a silver ETF, those authorized participants, they create new shares, and then they purchase the underlying silver to deliver it against the ETF, so the custodian, in exchange for the new units here, and then they're able to sell them. So the process helps those ETFs market price align with the value of the underlying silver holdings. Now you'll notice that SLV trades at a discount to that, and it's because there's a lot of fees that are associated with this. And when you go through these areas of robust growth and you get these declining interest in silver, that's where the separation really occurs. In order for them to be closely aligned, you need it to constantly be going up. You do also have another thing where you have these these authorized participants, they'll acquire the silver needed for the ETF creation from various sources within the silver bullion market. So again, I deal with a lot of these people. It's silver refiners, the bullion dealers, and the large institutional holders that hold silver. And then you also have, those are mostly the physical backed ETFs, and they are going to hold that in some secure vaults, and they're going to have to acquire it back and forth here. And then you have the futures based silver ETFs where they'll just acquire futures contracts against those shares here, and then that's how they can also acquire and increase exposure as silver price movements through the creation traded through these commodity contracts. Again, this is not me like endorsing any of these things. I'm a big believer in holding physical and things like that. The problem that I see with holding physical in any type of degree, a large scale on silver, for me personally, is that it's very cumbersome. And I ask anybody to start moving around something like 5, 10, 15,000 ounces of physical silver. It's going to be tough to do just from you need like 2 people to do this. You need a pickup truck. You need a storage space. You need things like that. You might even need to reinforce your floor if you got, if you're sitting on stilts here. That's a thing. And then having a bank hold it and stuff like that. So that's where, again, you should have physical metals, but you also want to have a vehicle because of the fact that you hold this thing physically. You know everything about it, right? So why not use that knowledge to try and potentially create some kind of income stream or create the potential wealth creation off of this particular product that you're potentially an expert on? And that's where you look at the first natural thing would be the ETFs, the silver futures contracts, the gold future contracts, whatever it is there is. And then if you really are really sophisticated, then you go into the miners. So I actually think that futures are easier to grasp than mining stocks because you have management, you have insurance, you have labor, you have fuel, you have inflation playing a role. You got the geopolitical things like where is that mining operation held at? Is it in Ecuador? Is it in South Africa? Where is it at there? And then also, you've just got their debt structures and things. It just gets very messy and complicated. So that's going way off the topic. I just wanted to address, I had a few people ask about this thing. So again, I don't endorse these derivatives and stuff, just trying to potentially profit from them. That's all. So you guys got any questions? Futures option trading is going to be a really busy day here with these markets here with a lot of positioning taking place. And not only the metals markets, but a lot of these different indices and other products, and this will move the currencies and things like that. So your checklist is really watch the dollar, watch 2-year treasury yields, watch the volatility index, watch the broad-based U.S. equities, and then you go down, you start looking at gold and then silver, and then you'll kind of get a dynamic as far as where flows are going. Is it risk on? Is it risk off? Even look at the cryptocurrencies as well. So you guys got any questions? You want to open up a futures trading account with us? Send an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.